Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving into some exciting news from Palantir Technologies. They've just announced a strategic partnership with Starlab Space that could send their stock soaring. But what does this mean for investors? Let's break it down and see if Palantir is truly heading to the moon. Palantir Technologies is taking its expertise in analytics and artificial intelligence to new heights. They formed a strategic partnership with Starlab Space, aiming to become the exclusive supplier of enterprise-wide software data management solutions for Starlab's commercial space station. This collaboration could be a game changer, so let's explore what it entails and what it could mean for Palantir's stock. Starlab Space is a joint venture between Voyager Space, Airbus, Mitsubishi, and MDA Space, with the ambitious goal of building and operating a commercial space station. They plan to maintain a human presence in low Earth orbit and transition research and science activities from the International Space Station to their commercial station, which they aim to have operational by 2028, just before the International Space Station is decommissioned in 2030. Palantir's role in this venture is significant. Their technology will be used to identify potential issues, predict maintenance needs, and prolong the life of critical components using data modeling through digital twins and AI technologies. This isn't Palantir's first foray into space. Since 2021, they've been working with the US Space Force on the Warp Core project, providing cloud and analytics services. Last year, they extended 3 contracts with the Space Force and the US Air Force worth a combined $110 million. Although the financial terms of the Starlab partnership weren't disclosed, it's clear that Palantir's technology is becoming the go-to solution for advanced mission-critical applications. This partnership could significantly boost Palantir's commercial revenue, which already saw a 27% increase in the first quarter to $299 million, with US commercial growth hitting 40% to $150 million. However, it's not all smooth sailing. Palantir's government revenue growth has slowed, particularly with the US government, where growth was just 12% in the first quarter. While this isn't bad, for a company valued at a forward price-to-sales multiple of 21 times, an overall revenue growth of 21% isn't enough to justify such a high valuation. To maintain and justify its valuation, Palantir needs to keep winning both commercial and government contracts. The Starlab deal is a step in the right direction for the commercial side, and the $480 million contract with the US Army for a Maven smart system prototype certainly helps on the government side. Palantir's technology is top-notch, used in critical tasks like tracking terrorists and managing COVID-19 data, highlighting its importance and effectiveness. But with high expectations already priced into the stock, it needs to show accelerating revenue growth to meet these expectations. Looking at the bigger picture, Palantir's commercial revenue pipeline is promising. In the first quarter, their total contract value in the commercial segment shot up by an impressive 187% year-over-year to $505 million. This metric, which refers to the total potential lifetime value of contracts, indicates a strong future revenue stream. Moreover, Palantir's remaining deal value, RDV, was $4.1 billion at the end of the first quarter, up 22% from the previous year. RDV represents the total remaining value of contracts and points to a healthy revenue pipeline. The company's commercial customer base is also growing, with a 69% increase in US commercial customers and a 53% overall increase in the first quarter. Palantir closed 87 deals worth $1 million or more in the first quarter of 2024, up from 64 deals in the same period last year. This shows that commercial customers are increasingly turning to Palantir's software solutions, which could lead to even more robust growth in the future. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just 1, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. Despite these positive signs, Palantir remains a high-risk, high-reward stock. While its commercial segment shows promise, the company's valuation requires it to consistently deliver strong growth. Investors should size their positions accordingly, balancing the potential for significant returns against the inherent risks. In conclusion, Palantir's partnership with Starlab Space and its growing commercial revenue pipeline could indeed send the stock to new heights. However, until the company demonstrates accelerating revenue growth, it's essential to approach with caution. Palantir's technology and strategic partnerships offer substantial potential, but the company needs to prove it can meet the high expectations set by its current valuation. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.